Thank you and good afternoon, everyone, to all the 350 plus participants that have joined this presentation and webinar today. I'm very pleased to be able to share some thoughts on this topic, and the fact that more than 350 people have joined is probably a testament that there are many in corporate Malaysia that are very keen to know about the recent developments and also how it works with integrated reporting. I do recognize that the audience I'm talking to today might comprise both preparers that have been using integrated reporting in their annual reports and those that have just started on their journey. I also recognize that there are many developments in sustainability reporting, especially over the last 6 to 9 months. And so I'll try and bring together a wide range of perspectives that hopefully will enrich those that have joined today's webinar. So moving on to the next slide. After this, okay. So the next slide, I wanted to start off really by looking at one very simple issue, right? And what drives us. So if we look at the next slide, you can see this is really the problem that we have, right? It's not a reporting problem or an IR adoption problem, right? It's really our climate, right? Earth's climate, pure and simple. I really like this slide because it actually showcases many of the issues that we face in Malaysia, right? If you look at the states, you can see that many states have got some sort of a negative carbon GHG emission. It's interesting that Selangor and Johor are among the top two there, but it also reflects the huge economic activities that are undertaken in those states. Sabah and Sarawak probably are better on a net basis because of the carbon sinks that they have. But overall, if you tally up the numbers, right, and we're all accountants, you can see that we obviously still have a net positive GHG emissions that we're all striving to meet in the next 20 or 30 years or so. So this really is what is driving those trends. And on the next slide, I then move on to share where the SC has really felt that to help drive positive change in terms of actions on climate and other sustainability related matter, the NSRF, right, was launched sometime in the third, fourth quarter of last year. I'm sure many of you have seen this timeline, right? And those of you who are the Group 1 PLCs with a market cap of more than 2 billion are obviously very concerned about whether you can get your reports out in time. While there are additional transitional reliefs, we do know that those at most are going to be extended for a further 2 years. And we haven't even come into the reasonable assurance process that is going to kick in for Scope 1 and Scope 2 emissions from 2027 onwards, starting with the Group 1 PLCs. All in, a lot of work to do. So on the next slide, I then wanted to set out an overview of where the new frontier is with S1 and S2. You can see that this is how the ISSB has come together, starting from COP21 in Glasgow, and then moving on to how they wanted to create one global standard, bringing together the best practices of existing frameworks in the field of sustainability. Keep an eye on the top right-hand corner, where we talk about the SASB standards, the board, and also integrated reporting. I will be referring to that quite a bit in my future slides. On the next slide, I then wanted to highlight what happens in the actual standards themselves. Now, for those who have not had a chance to go through these standards, the best way, I guess, for those of us who are members of MIA and probably accountants, right, by training, is to liken S1 to basically IAS1 of IFRS standards, right? The base standard that sets out what your profit and loss looks like, what your balance sheet looks like, your cash flow statement, and the notes to the accounts. That's basically the baseline standard. that sets out how all future sustainability standards will be drafted and created thereon. So far, the standard setters have created one thematic standard, which is S2, primarily on climate. We do know that there are plans in place from their work plans and targets in the future to add on other sustainability standards. I've obviously been asked what's the next that's coming up. There is a lot of talk about biodiversity, also human rights, as being the potential standards that will come. But these will take time. And therefore, in the meantime, there are other frameworks and other standards to support the implementation of these sustainability standards. All the standards have a general framework. They have a starting point where you want to talk about the governance processes, the controls and procedures to monitor, manage, and oversee all sustainability risk and opportunities, your strategies for managing these risk and opportunities, the processes that you undergo, and last but not least, metrics and targets, or metrics and disclosures. And where would we be, right, as accountants, if we didn't have some numbers to back up all the qualitative disclosures that are going to be included? On the next slide, I then wanted to move on to talk about how IR concepts are actually embedded within these sustainability disclosure standards. In May last year, the foundation did issue an updated guide to help companies that are using IR implement ISSB. And we also note that obviously S1 has already incorporated concepts from the IR reporting framework. So for those of you that are on the call today that have adopted IR, you may worry less, right, and sleep a little bit more, because in some ways, some of the work and disclosures that you have in your existing annual reports can be brought over as you implement S1 and S2. And this is very important. I'm going to share some examples in subsequent slides on how this transition can be made a little less painful. Of course, for those who are looking at implementing integrated reporting, we welcome you to join this journey, because we do know that integrated reporting does provide a very holistic framework in terms of reporting how a company has truly performed. On the next slide, I've then highlighted how the disclosures are incorporated within an integrated report to show that the actual content elements of IR and the IFRS S1 and S2 disclosures can be mapped to each other, and you're not looking at starting from ground zero. Following on, I've then just tried to describe on the following slide what is the type of consolidated sustainability information that you require. So if we can move on and bring up the pictures. Thank you. Continue, please. Yes. You can see how when we talk about reporting boundaries, your own operations and your value chain, in many ways, ISSB also requires the type of information that IR preparers have already been talking about. And one additional point to note is you now have to look at the information being the same reporting entity as the related financial statements. So unlike some PLCs that used to report just based on material segments, or perhaps only on certain organizational business units, you now have to take a financial statement consolidated approach to make sure that you're covering the full value chain. And this, of course, includes not just your consolidated subsidiaries, it also includes your leased assets, joint operations, associates, and those that have a significant impact on your value chain, both upstream and downstream. Moving on to the next slide. I'm now going to show some examples of SROs, right? And SROs are basically sustainability, risk, and opportunities. All of you here will find that this is a very important point to note as you plan and develop and prepare and report your inaugural IFRS S1 and S2 sustainability statements? You will realize that understanding the universe of sustainability issues itself is sometimes a challenge because it actually covers all aspects of your organization. So the SASB themselves gave some examples cut across 5 different dimensions. The environment, of course, also looking at leadership and governance, areas such as social capital, human capital, and of course also on your business model and innovation. You find that this is actually a very helpful guide in terms of the companies themselves identifying what really are those material matters, what's really those key things that drives your business, insofar as it involves sustainability related matters. On the next slide, I then wanted to share that while this is coming from the SASB, they also have got climate-related risk and opportunities, which is a subset of the overall SROs. I'm sure many of these are not unfamiliar to participants on this call. Malaysia itself obviously has got floods quite often. My home state of Johor just experienced that, or still is experiencing it over this last 1 week or so. But those are just some of the physical risk. Obviously, in terms of transition risk, we've also got the effect of legal and regulatory requirements. So we can see with the planned carbon bill coming on board potentially in the second half of 2025 in Malaysia, those will also present their own risk and opportunities for corporate Malaysia. On the next slide is probably a slide that most of you who adopt IR are quite familiar with, which shows the 6 capitals. And you can see that even if you look at the 6 capitals and the value creation process, we know that as part of that, you are actually looking at risk and opportunities. So what I then decided to do is to actually then go back to the examples of what are the sources of capitals, right? And I wanted to show some actual real-life examples. So on the next slide, and we picked up this example actually from, interestingly, South Africa. And the reason is because in South Africa, IR has been mandatory for many years. So they probably have the best published IR reports, I guess, just through practice. So on the next slide, you can see that we are showing an example of how risk and opportunities have been prepared by Nedbank, right? Nedbank, which is actually a bank in South Africa. This is coming from the 2022 integrated report. So if you look at this, you can see how they have covered not just the risk, and the risk are not just covering financial risk, they are also looking at non-financial risk. They also are looking at how the opportunities that can be obtained, right, if their strategy gets it right. And you can see that some of these opportunities are in the sustainability era. For example, as a bank providing sustainable development finance, which provides basically exponential growth as more companies, businesses, agencies, and government-linked companies continue to adopt sustainable practices. On the next slide, I then wanted to show a further example of how the risk and opportunities are explained in the company's operating context. And on the right-hand corner, what's noteworthy is that while you're looking at risk and opportunities, you're also linking it to the 6 capitals of IR. And so this is where we are saying that you can integrate applying IFRS, the ISSB standards, and integrated reporting within the same report. And this is the journey that corporate Malaysia will start to take. You also obviously have got the tracking of year-on-year changes that have happened. And you can see that the inherent and residual risk and the topics that are covered under the risk category go far beyond just the financial risk. And this is where your sustainability risk and opportunities will come as you plan on what is material to be disclosed. Another example on the next slide that I wanted to share was in terms of how you look at information on the short to medium to long term. Again, something that's coming in from the requirements of S1 and S2, and again, something that has already been required under the IR framework. Now, perhaps looking at these charts in front of you, maybe the only new one that this bank needs to add is maybe on climate, right? Where would be the impact of climate scenario analysis, depending on whether the weather goes up by 1.5 degrees or anything more. But you can see that a lot of information is already ready for the IR preparers. Next, I wanted to show some examples of metrics and disclosures. On the next slide, I just wanted to highlight on the right-hand side. So on the left-hand side, we have covered the SROs. So if you look at the right-hand side, the S1 actually requires you to say, shall refer to and consider the SASB standards. And so the SASB industry volumes, there are 77 of them, and I'm sure each of you will find some industry that's relevant to you. You will find that they have a list of industry required disclosures, which have been built up over time by incorporating feedback from the relevant industries. Of course, the entities may consider the most recent pronouncement of other standard setting bodies, and this is where bodies like IR and other bodies may have certain type of disclosures that companies in Malaysia may find helpful. So I'm going to show now a couple of industries. On the next slide, I wanted to pick up something on engineering and construction, given that a lot of this activity happens in Malaysia. So if you look at the metric in the second column from the left, you can see that there are many sustainability related disclosures that are required for the first time if you are within this industry. Many may not even have this sort of operational data ready. And so the process of collating them will take time, more so for those Group 1 companies that are due to report this by the end of this year. From here, I just wanted to pick up two of them on the next slide, just to highlight the depth at which the discussion and qualitative information that needs to go into your inaugural report. And this one is actually talking about the processes to assess and manage environmental risk associated with project design, siting, and construction. And it actually also asks you to use the relevant industry guides, which actually have environmental metrics to them. So you can see that a lot of this information may reside in your operational teams and now need to be brought out. Now for IR preparers, this may not be something new. You may have already, to some extent, already identified this in your assessment of the 6 capitals and in your assessment of the risk and opportunities in this business. The next one is, of course, another sample on the next slide. There's also a requirement to actually disclose the number of commission projects that are certified to a third-party sustainability standard, and also active projects seeking such certification. I'm sure some of you see the word leads and think, oh yeah, I've heard of that before, perhaps, right? And there are many of these standards either issued by the Malaysian regulatory agencies or by some global standard setter. So now you have to consider that. And this will also be something that the IR preparers may have already incorporated into their disclosure assessments in the past. But it is something new that will now require to be disclosed. The next one, on the next slide, I wanted to look at just a quick, this one and another industry that we're all familiar with, which is home builders, right? So the property developers that build our homes, our residential homes, commercial homes, etc. You can see that similar to engineering and construction, they have tailored the sustainability disclosure metrics to be aligned with what's relevant in this industry. On the next slide, I wanted to pick up two again, disclosure topics. Oh, sorry, one slide after this. Two disclosure topics that for those of you who are in the property development industry will find quite interesting, especially if this has not been done in the past. So moving on to the next slide. The first one relates to, again, a discussion of a process. How do you integrate environmental considerations into your site selection for your township, for example, design, development, and construction? It may be in many cases, some of this is already in your EIA report. But if it isn't, you may need to consider additional work within your operational team to discuss how that process has been properly carried out. On the next slide is something, as I said, we Malaysians are very used to, right? And becomes an important consideration. So now the property development PLCs will have to actually disclose the number of lots located in 100-year flood zones. I'm sure as you have seen nowadays, many new places are getting flooded for the first time as climate change continues to take effect. We also note that with this requirement, right, if there are land areas subject to a 1% or greater chance of flooding in any given year, that needs to be disclosed. And so you can imagine if you are actually about to buy a property, how information like this will determine your future buying choices. Or if you have bought a property, right, in an existing township that now discloses that it is at a higher risk of a 100-year flood zone, of this happening on a more frequent basis, what do you then do with where you're staying right now? So these disclosures are actually going to open up many other interesting aspects insofar as sustainability risk and opportunities are concerned. I also wanted to show on the next slide how even for integrated reporting, there are already metrics and disclosures that are required to be disclosed. This one shows generally financial related targets. On the next slide, however, you can see that IR already also requires disclosure of non-financial targets. And if you move to the next slide, you can see that, for example, here, the type of information that has been disclosed relates to matters such as education, digital, and other important risk and opportunities for this particular bank. And it's also not just looking at very outward-looking business risk and opportunities. I've also taken a snapshot on the next slide of something that's more important internally. So you can see on the following slide an example of how this bank has also put in diversity indicators. You can move to the next slide. Yep, you can see this, right? In terms of diversity at the board level, board demographics, and what are the actual indicators that are set in terms of the objectives and how much have they been met. So again, IR has really helped, I guess, in smoothing or making smooth the journey towards S1 and S2. For those of you who haven't yet adopted IR, perhaps a little longer, the journey, and a little bit more difficult, but nevertheless, it's something to start on, given the requirements now of NSRF. I wanted to end this metrics on the next slide by showing that for climate, there are 7 specific climate-related disclosures. Next slide, please. These are also metrics that perhaps businesses have never really actually set in the past. And even if they've set them, perhaps they've never really monitored them. So again, new metrics that need to be measured, right, and reported. I always like the bottom right-hand one on remuneration. It'll be very interesting to see as the first reports go out next year, how much of climate-related considerations are factored into the remuneration of the executive management, whether it's your CEO or the C-suite management. Are any of them actually going to report how much that percentage is, or most of them really going to be starting on their journey and potentially reporting that actually currently none of their remuneration or balance scorecards are actually related to climate. Again, something new that everyone will have to get used to. I wanted to show though that if you are already preparing IR, so if we move to the next slide, you can see that the better performing companies have already actually put in the performance and the remuneration for senior management. And you can see from this slide that it is not just focused on financial metrics. They actually have over time developed ESG, right? Performance measures, which then becomes a key objective to be met by senior management. So will it also result in potentially new ways of doing business or managing your human capital and the way management operates internally? It definitely will. So how do you get started? If we can move on to the next slide and one slide after this. Or one before this. Okay, so this is my last slide actually. So basically, I think the start is really just doing a gap assessment. All of you have obviously had some familiarity in preparing PLC annual reports. So you take your 2024 report, which you may just about to issue or have issued, compare that to the requirements of S1 and S2, and you'll be able to get a good indicator of how big the gap is that you need to fill up in the next 1 year. And that also obviously gives you that effectiveness assessment, because you're also going to be looking at your internal resources and management's capability to fill those gaps in due time. Obviously, besides the strategy level and having an implementation roadmap is helpful, you also want to transform your organization accordingly. So making sure that scenario analysis is built in, making sure that you relook at your operating model, your business model, also the process documentation that needs to come in. So for your operations team, besides having, for example, ISO 9000 or the relevant ISO for your manufacturing operation, you may now need to think about what are the type of processes you need to implement to collate all this sustainability design information. And this will, of course, potentially also include new IT systems that need to be built in and then eventually implemented. And moving on to that, you're also looking at upskilling your organization so that they're all ready to meet this tremendous journey that needs to take place. What are the type of project management office or steering committees that you need to have to ensure that everybody are meeting the relevant timelines? And finally, last but not least, the level of assurance that you or the board of directors want to ensure that the quality of data that is issued in your annual report is equivalent to basically the quality of data in your financial statements. And we all know the rigor through which financial statement audit gives management. So this is basically our view, really, of how the strategy, the transformation, and the reporting and assurance can take corporates through this ISSB reporting journey. And like I said, if you're already an IR preparer, some aspects of this have already been done. So perhaps the journey may be less painful. So I end this with my last slide, my closing slide on the next one, that basically says we have a lot to do. Thank you, ladies and gentlemen.